Hi friends, welcome to a new video on Introduction of Accounting Standards. Imagine watching a basketball game where one player decides a layup in worth 5 points. The other team decides you don't need to dribble and the referee is just flipping a coin.
Absolute chaos.
Right. Without universal rule, games break down. Now imagine that
Same chaos.
in the business world, company A calculates its profit by including money they hope to make next year. Company B subtract their office snacks as $1 million expenses. So company C just leaves out their debts entirely. How could an investor ever know which company is actually doing well? They don't, and that exactly why we have accounting standards. Hey everyone, welcome back. Today we are breaking down the fundamental backbone of financial reporting, that is accounting standards, in plain simple language for your exam and beyond. So let us start. What are accounting standards? At its core, an accounting standard is simply a set of standardized rules, principles, and guidelines for how financial transactions must be recorded and presented. Think of them as the standard grammar rules of the business language. Just like grammar ensures we understand each other's sentence, accounting standards ensure everyone understand a financial statement. They focus on four main things. The first one is recognition. When should an item be recorded? For example, do we record a sale when the order is placed or when the cash arrives? Second, measurement. What value should be attached to it? For example, do we record a building at what we paid 20 years ago or what its own worth today? Third one, presentation. How should financial statements be structured? Fourth one, disclosure. What extra details must be explained in the footnotes? Why do these four things matter? Because of two big words you will hear honest consistently in your courses: comparability and transparency. If Apple and Samsung use the same standard framework, an investor can compare their balance sheets side by side and make an informed decision. Who makes the rules? So GAAP versus IFRS. Who actually write these rules? Depending on where you live or study, so you will encounter two primary standard settings framework. The first one is GAAP, Generally Accepted Accounting Principles. If you are in the United States, companies follow US GAAP, issued by an independent body called the FASB, Financial Accounting Standard Board. GAAP is very rule-based and it gives detailed, specific instructions for most every exact scenario. IFRS, International Financial Reporting Standards, used by over 140 countries, including the European Union, Canada, India, under IND-AS, Australia, and many others. IFRS is set by the IASB, International Accounting Standard Board. Unlike GAAP, IFRS is more principle based. It provides broad guidelines and relies on the professional judgment. Think of GAAP like a detailed recipe that gives exact grams and baking times. Think of IFRS like a master chef giving you general guidelines. Bake until the golden brown and season to taste. Both get you a cake, but the approach is different. Real world impact. Why should you care about the accounting standards? You might be thinking, okay, this is sounds dry. Why does it matter to me? So it matters because when companies ignore or manipulate accounting standards, so real people lose money. Take famous corporate collapse scandals throughout the history, like Enron in the early 2000s or Wirecard most recently. In many of these cases, executives bend or broke accounting rules to hide the debt and artificially boost profit numbers. So accounting standard acts as the shield protecting shareholders, employees, banks, and the public from misleading financial claims. They build trust in the global financial markets. Without trust, people stop investing and the economy grinds to a halt. In conclusion, to wrap up in three quick takeaways, accounting standards are the universal rule for financial reporting. They ensure financial statements are consistent, comparable, and reliable. GAAP dominates the US while IFRS is the global standard used by most of the world. If you found this simple breakdown helpful, so hit that like button, subscribe for more accounting and finance topics, and drop any question down in the comment below. Good luck with your studies and I will see you in the next videos.